Let's welcome on board Sandip Sabharwal first and figure out what he's making of the markets and individual stocks. Sandip, hi, morning. So much to discuss. But let's start with Ola Electric because the IPO opens today. Some of the marquee investors have been in there already allocated to the anchor book. But you're not quite enthused by this one, right?
Yes, I think Ola Electric is coming at a time when market is in a euphoric bull run. Uh, its fundamentals have been actually deteriorating for some time, and with reduced benefits per vehicle for EVs, the profitability, the move towards profitability will get very, very prolonged for them. I don't see under the current structure them making actually any profits. And the incumbent players, TVS, Hero Moto through JV, and Bajaj Auto have become very aggressive on the EV side. And to that extent, the non sort of legacy players who actually took a lead on the EV side will keep on losing market share out here. And then eventually warranty claims, etc., come up after a few years in these EVs. So uh, it's a aggressively priced IPO. So the listing, etc., will depend on how the markets pan out at that time.
Okay, fair enough. That's the view coming in on the Ola Electric IPO. But what's the outlook then on the auto sales numbers, Sandeep? It's been a bit of a mixed bag this time around. How have you read into Escorts, Tata Motors, and some of the other auto majors?
So I think auto sales numbers are in line with expectations actually. So some analysts might have been very aggressive because most of the companies had indicated that there is some inventory buildup of 4 5 days extra, and they need to correct it. So wholesale dispatches would moderate uh, till we reach the festival season when they will again pick up from September onwards. So I think the month of July and August could be moderate for auto company dispatches, at least domestically. And if that creates some correction, then I think we could uh, look for opportunities to buy.
But Sandeep, I know we talked about the sales figures, but what's the pecking order like post seeing good numbers from all three majors, M&M, Maruti, as well as Tata Motors, and anything that you would recommend still buying at these levels?
I think we need to wait out and see some correction play out. And so on corrections of maybe 5 odd percent, we could look at buying into these stocks 5 or 10%, depending on how the overall market plays out. So pecking order, so Maruti continues to outperform on deliveries, but the stock has also been strong. But I think that's the stock too that could continue to outperform. M&M results were good. It's got sold out post results. So if there's some other further correction, we could find opportunities. And Tata Motors has had a stellar run. So I think it'll consolidate for some time right now.
I was not there in the studio when you spoke about Ola Electric, but knowing you, I'm assuming that this is a stock which is expensive.
Yes, I think it's very expensive given the fact that they are making huge losses and losses are unlikely to come down. So the key parameter we need to evaluate while investing in startup companies or companies which could be and in a totally new area where other players are not in is whether they'll be able to accelerate sales growth and as a result reduce losses. It does not seem so to me at this stage that this is going to happen with Ola Electric. And they could surprise us in a few years, but I think next couple of years will be very tough.
Sandeep, I accept that right now, and again, the business they are in, Sandeep, it's full of disruption. You don't know which way that battery technology is moving. I mean, there is billions of dollars globally getting into battery research where everybody wants to, reach that eureka moment of making battery cheap and light. But could it be like a Zomato or a Policy Bazaar kind of a story, which is that when they went public, there were fat losses, the losses accelerated, but then came that J curve where operating leverage and losses became profits. Could that be the story for Ola Electric, maybe after a year, year and a half?
I would think it's unlikely. See, Zomato, I always maintained that it was in a duopoly. And eventually, given the fact that the entry barriers are so high, and we don't have any incumbent players in this sector of food delivery uh, or quick service delivery, etc. So eventually, they'll start doing well as the operating leverage kicks in, and that's happened. But there is no such story for a company like Ola Electric.
Sandeep, this talk of global recession, and I don't know why it is surfacing up, because 15 days ago we were talking about US GDP growth strong, inflation coming under control. That recession talk is back again. Commodities have started correcting. Copper is in a bear market. Can we read in between lines and assume that we are in for a tough second half for the world?
The volatility will increase for sure. The current valuations don't leave anything the delivery has to be perfect from here on. And there are several factors which could affect this because if traders get enthused by reducing interest rates or Fed rate cut possibilities, but I think they start cutting only when unemployment increases or the economy starts slowing down, etc. And companies lose pricing power, which is normally not good for equities. On top of that, we have the yen appreciation cycle. If you see, yen has already appreciated 7-8% in a very short period of time. There are trillions of uh, sort of dollars of money playing the yen carry trade. Now, as that gets unwound, it could also create volatility across asset classes, which could be across the board. So it's time, like I've been saying over the last few days, like it's the market has held up, but then the valuation don't give comfort at this stage. So we need to be careful, let the markets give up some of the gains and then look at buying eventually.
Okay. And when you say look at buying eventually, what are we talking about? I mean, 5%, 10%, and these days when gains, when cuts come, I mean, they last for a day or so. Look at what we saw on the budget day, or for that matter, look at what we saw on election day. I mean, there is so much of money on the sideline that whenever markets are falling, buyers are coming out and they come out in a hurry.
Yeah, after the end of a very strong bullish phase or inversely bearish phase, the initial sell-offs on the bullish side, buying on the bearish side, then get taken down again and again. And then eventually the market gives up the gain. So market should give up some gains. On the large cap side, the sell-off should be, I think, 5 to 10%. If it comes more near 10%, it will be more comforting. The mid caps could correct maybe 2 to 5% more than that. And uh, the eventual understanding, as far as I'm concerned, is that this is not the end of the bull phase because for bullish phases to end, inflation has to go out of control. There has to be some sort of financial sector crisis, etc. So I think a lot of those things are missing. So it will be as the correction plays out, whether today it will be a start or it'll again bounce back and then correct. But eventually, over the next 2-3 months, we'll see this correction play out. So investors need to be a bit patient at this stage.
What's your take, Sandeep, when it comes to ITC post the quarterly performance? You know, it's been steady revenue growth for the cigarette segment. You've seen the non-FMCG segments as well performing fairly okay. Your reading on ITC?
Overall, results were below expectations. So the company is somewhat more bullish, but then given the fact that it's been such a huge outperformer, these results in the immediate term don't create any upside. So my guess is that it will consolidate or give up some gains in the near term, and then we could look at it at after that.
You know, by the way, I was looking at some data which someone sent me in the morning, and I'm just sharing it, that Quant AMC has got ITC in all the funds now. Now, why am I bringing it up is just because we've seen Quant taking very aggressive bets. Few months ago, they were very big in Reliance. Now looks like they're really betting on ITC. We'll figure out, because by now the fact sheets would start coming out in a day or so. But that's ITC for you. Is cigarette volume is actually not bad at all, because this is operating leverage business. And the cigarette business is the operating leverage business. It's a business where 5-6% growth continues and the returns are so strong that it just boosts up your bottom line. Should that be the thought here?
I think people are getting excited on 1 or 2% volume growth here or there. So eventually, we need to realize that cigarettes is now a very, very low single digits growth business. So there's only so much it can contribute to the profits. The main profits have to come from the rest of the FMCG segment. And there we've seen ifs and buts, like there have been phases of good growth and margin improvement, and then there have been phases they have stalled. So I think that is required to fire for the stock to actually get further re-rated higher.
Sandeep, one side today everybody is talking about Zomato, and a year ago everybody was talking about Paytm. Now the reverse has happened. Paytm has fallen off the radar, Zomato is on the highest pedestal. Is it a good time to, let's say, perhaps look at a stock like Paytm because there is stress, there is distress, there is disbelief, the stock is off from the high. We got a comment from the regulator last Friday where looks like they may start getting some approvals. I'm purely talking about what we flashed last Friday. Could Paytm be a deep contra buy right now, where less to lose and more to gain?
I find that company very tough to evaluate because I don't think they have a sustainable business model which can lead to profitability in a manner where you create some sort of entry barrier, etc. The entire loan growth, the profit growth or improvement was coming through the loan origination business of theirs, which has got stalled. So they face issues across various business segments. Now, whether they can go back to the growth path with the same mojo again, I think it will be tough. So at some stage when stocks fall 50-60%, they can always bounce back. But then a sustainable trend, in my view, is tough.
Before we wrap our today's interaction, it's almost 9. What is good but not cheap in this market, and what is cheap but not good?
Nothing is cheap. So most of the bad things are also expensive. So you need to exit those stocks, I think. What is good and expensive, I think what the segments which we can look at on corrections is, I still think autos could be good. I still think if there is a deep sell-off in defense stocks, that could be one sector we can again have a look at. Most of the construction infra names still have momentum, but then again they have also run up. So then on correction we could also look at those. Even telecom, there's only one credible player, Bharti. So, but I think they could continue to do well. So I think financials is a big segment of the market, but there, from whatever the regulator is doing, next 1 year could be tough for financials, especially banks, for the next 1 year. So I think that is one segment which could underperform.
Sandeep, good to have you. Thanks so much for joining in and sharing with us your take on the markets.